Hey guys, in this video we'll cover problem number 17. Before we start off with problem number 17, I would like to brief you up about alternate minimum tax. Now what exactly is alternate minimum tax? Alternate minimum tax is applicable to all SSEs except companies because MAT is taking care of companies. MAT is minimum alternative tax. Okay, since MAT is taking care of companies, there's this concept called as alternate minimum tax which has brought into picture and is applicable to all the SSEs apart from companies. Now, whenever you calculate tax as per the normal provisions of income tax, you simultaneously on the parallel side you calculate even as per the provisions of alternate minimum tax. Okay, and whichever is higher will be your tax liability. Now for instance, when you calculate tax as per the normal provisions and it comes down to 10 lakhs, just assume, and when you calculate tax as per AMT provisions, you arrive at 20 lakhs. Now your 20 lakhs is higher when compared to the normal provisions. When you calculate tax as per the normal provisions, that is 10 lakhs. So your 20 lakhs will be your tax liability. However, since you are paying an additional tax liability, you are bearing an additional tax liability of 10 lakhs than that what is calculated as per the normal provisions. That additional amount will be given as a credit and you can claim credit for the subsequent 15 years. That is, you can carry it forward for the next 15 years from the year in which you have paid at alternate minimum tax. Okay, now the same thing we'll look at it in the when we are going to the problem. Okay, now let's start with the problem. Mr. Harish commenced operations of the business of setting up a warehousing facility for storage of food grains. Storage of food grains is nothing but agricultural produce. Then sugar and edible oils on 1/4/2019. So these things are covered under section 35 AD. 35 AD is talking about specified businesses wherein you get 100% deduction except edible oil. Edible oil is not covered under specified businesses, therefore you can't claim deduction under 35 AD. Now coming here to the first point, profits from business computed before allowing deduction under section 35 AD and 35 and section 32. Section 32 is your depreciation section and 35 AD is specifying all the it has a list of 14 businesses. Okay, they are specified businesses wherein whatever capital investment you make, you get a deduction of 100%. Okay, so here food grains 125, sugar is 60 and edible oil is 30. However, you cannot claim 100% deduction on 30. This is the profit, this is not the investment. And then subsequently you've got capital expenditure on land and building purchased exclusively for the business. So he's telling you capital expenditure on land and building purchased exclusively for the business. Okay, this is 120, 90 and 75. However, you have to note that section 3580 clearly specifies any investment made on land, you cannot claim deduction. Now, the third point is telling you cost of land included in 2 above. So, out of 120 lakhs, okay, 75 is the land component. So, you have to deduct 75 from 120 and the remaining amount is permissible at a rate of 100%. That is, you can claim 100% deduction on the remaining amount. On similar grounds, when it comes to sugar as well, capital expenditure on land and building is 90 lakhs and cost of land included in the above amount is 60 lakhs. So the net of amount is 30 lakhs. And coming to edible oil, it's the same thing. However, you don't get deduction on You don't get 100% deduction on this. All you can do is you can claim depreciation under section 32. And then coming to the fourth point, capital expenditure incurred in the previous year 2019-20 on extension, reconstruction of building purchased and used exclusively for business. So this is also capital expenditure of 30, 20 and 10. Now what are you supposed to calculate? You're supposed to compute Mr. Harish's total income and tax liability for AY 2021, assuming that Mr. Harish does not have any income other than income from the above business. So he's got exclusive income from this specified business. Now you have to compute computation of total income of Mr. Harish. Okay, before you calculate this, you have to work it out. Okay, how do you work it out? Profit from specified business, first you have to calculate the net figure after calculating deduction of 100%. Okay, however, it is only applicable on food grains and also sugar. So your profit as given in the question is 125 lakhs and on sugar it is 60 lakhs, accumulating to 185 lakhs. And then your capital expenditure as given is 45 lakhs, 30 lakhs and 75 lakhs. How did you arrive at this particular amount? It is pretty simple. Now in the question he has given you your capital expenditure on land and building is 120. That is, this 120 includes land and also building. And the cost of land is again subsequently given in point 3, that is 75 lakhs. So you have to reduce this 75 lakhs from 120. The net of figure is 45, that is your capital expenditure. You put it here. On similar grounds, you calculate even this 30. And then when you check out the subsequent point, okay, this land has already been adjusted, and then capital expenditure incurred in the previous year 1920, that is 30 lakhs, 20 lakhs. These two amounts will be adjusted here, 30 lakhs and 20 lakhs. This is also permitted. So your total capital expenditure, when you accumulate 45 lakhs and 30 lakhs, and also the same in case of sugar, 30 lakhs and 20 lakhs. Your total capital expenditure you arrive at is 75 lakhs and 50 lakhs. Now these two amounts, they accumulate to 125 lakhs. Now after arriving at 125, this you will deduct from the profit part, that is out of 185. Therefore you will arrive at 50, 10 and 60. I mean the net profit accumulates to 60 lakhs. Got it? I'll repeat it. Your profit from specified business as given in the question is 125 lakhs, 60 lakhs, which accumulates to 185 lakhs. When you reduce 45, 30, that is 75 lakhs together, and also a further capital expenditure which was given in the question, that is 30 lakhs, 20 lakhs, this accumulates to 50, and then 45 and 30 accumulate to 75, 30 and 20 accumulate to 50, and then 75 and 50 accumulate to 125. Okay, now when you deduct the permitted deduction out of the profit which is given in the question, you will arrive at a net profit of 60. That is, first you will arrive at net profit of 50 when it comes to food grains, and 10 net profit is out of sugar, and the net of the cumulative of food grains and sugar is 60. Alright. Now this particular amount, this profit, you will go and put it in your main frame. That is profits and gains from specified business of setting up a warehouse facility for storage of food grains and sugar. Here you have to add a tag saying that you have calculated this particular amount. From where did you get this 60? You have to point out the working note. See working note below. And then subsequently there is one amount, that is edible oil, which is not qualifying under section 3580. That is, it is not specified business. Therefore no deduction is permitted. Therefore on whatever you have invested on your assets on the building part, you will get a depreciation under section 32. Now here profit from business of setting up a warehouse for storage facilities edible oil before providing depreciation is 30 lakhs. Alright. And then this is how did you arrive at 30 lakhs? Because cost of land you are not permitted. So 75 lakhs minus 45 lakhs is 30 lakhs. Therefore depreciation is this is a general structure, this is not a residential structure, so you are entitled to depreciation at the rate of 10% and not 5%. So 10% on 40 lakhs it comes to 4 lakhs. On 40 lakhs it comes to 4 lakhs. How did you get this? Now 75 lakhs minus 45 lakhs is 30 lakhs. However, to this 30 you are supposed to add further 10 lakhs. Okay, you have also capital expenditure incurred in the previous year 2019 20 on extension and reconstruction of building purchased and used exclusively for the business. So to this 10, if you add another 10 lakhs, you will arrive at 40, on which you calculate a depreciation at the rate of 10%, which comes down to 4 lakhs, and the net of figure 30 minus 4 comes to 26 lakhs. Therefore, your total income from all the activities is 86 lakhs. Now on 86 lakhs, you are supposed to calculate taxation, tax liability as per the normal provisions and also as per AMT provisions. Now, tax liability under Income Tax Act as per the normal provisions. How did you arrive at this particular amount? Now, it's pretty simple. On 86 lakhs, you have to calculate as per the slab rate. Up to 2.5 lakhs, your tax rate is 0. From 2.5 lakhs to 5 lakhs, it is 5%. That 5% is how much? 2,50,000 into 5%, that comes to 12,500. From 5 lakhs to 10 lakhs, it is 1 lakh. That is 1 lakh plus 12,500, it comes to 1 lakh 12,500. Now when you calculate on the remaining 76 lakhs, how much you are calculating at the rate of 30%. That comes to 22 lakhs 80,000. To 22 lakhs 80,000, you will add the remaining amount also, remaining tax liability as well. That is 1 lakh 12,500. When you add 1 lakh 12,500, it comes to 23 lakhs 92,500. And to that amount, you are supposed to add surcharge as well. Okay. Now, surcharge at the rate of 10%, because that is the slab rate under which you actually fall. So when you accumulate everything including surcharge, you arrive at 26 lakhs 31,750 rupees. Okay, this amount is given in lakhs. To that you add health and education cess of 1.0527. When you calculate 4% on 26,3175, you arrive at 1.0527, and when you accumulate both of them, your total tax liability is 27 lakhs 37,020 rupees. Now, subsequently, you are supposed to calculate AMT. To calculate AMT, first thing what you are supposed to do is you have to calculate adjusted total income. How do you calculate adjusted total income? Now you will take your profit as given in the question. That is, your total profit is 86 lakhs. To that particular amount, you will add back all the deductions which you were permitted under section 35AD, under section 10AA, and also deductions from chapter 6A, that is only from 80IA to 80RRB except 80P. So all these things will be added back. But in our question, we have only deduction under section 35AD, that is 125 was deducted. That will be added back, and also further depreciation is permitted. Why will you calculate depreciation? You will presume that no deduction is permitted. When your no deduction is permitted under section 35AB, you will be entitled to calculate depreciation. Therefore, you will presume that no deduction has been claimed and you calculate depreciation. So 10% on 125 lakhs comes to 12.50, and then your net figure will be what you have to add back is 112 lakhs 50,000, and when you accumulate it, when you add it back to your total income as given in the question, you arrive at 198.50. The moment you arrive at that, you have to calculate AMT, which is calculated at the rate of 18.5%, to which even surcharge at the rate of 15% is applicable because your income is more than 100 lakhs. Okay. So AMT at the rate of 18.5% works out to 36.72, and then to that you add surcharge at the rate of 15%. Okay. So when you accumulate everything, your adjusted total income is 198.50. On that, your tax works out to 42.23. On this particular amount, you have to further calculate education cess, education and health cess, that comes to 4%, that is 1.69. So you are paying an amount of almost 16 lakhs 54,980 over and above the tax as calculated as per the normal provisions. Your tax as per the normal provisions is 27 lakhs approximately, and your tax as calculated as per AMT is 43.92. So when you take the difference between 43.92 and 27.32, the tax liability, that is the difference, what you have is called as AMT credit. Okay, 43.92 minus 27.37, the difference is 16.5498. This is the MAT credit which you can carry forward for a period of subsequent 15 years. Okay, the same thing will be again mentioned in the working notes as well. Deduction of 100% of the capital expenditure is available under section 35AD for the assessment year 2020-21 in respect of the specified business for setting up and operating a warehousing facility for storage of sugar where operation are commenced on or after 1/4/2012. However, since setting up and operating warehousing facility for storage of edible oil is not a specified business, therefore you are not permitted to claim deduction. However, you can claim deduction under section 32, not deduction, depreciation under section 32 at the rate of 10% because you have invested in a building, and the depreciation rate at the rate on general structures is 10%. So this is all about your problem number 17. So for now we'll wrap up PGBP, problems from PGBP, and if you have any doubts pertaining to any problem from PGBP, you can mail me or you can mention down in the comments. I'll definitely revert back to you much more in detail depending on your doubt. Alright, thank you.